Welcome to the Reinsurance Podcast here at TMPAA. I'm joined with Matthew Jones from MS Transverse. Welcome, sir.
Thank you very much for having me. Can't believe we both had to come all the way from London to catch up, finally.
I know. But we have such a hard time catching up in London. I feel this is our moment. Yeah, exactly. Our diaries are free. We can spend some time catching up.
Exactly.
And our chats are now recorded for everyone to enjoy, so everybody wins.
Yeah,
exactly.
Okay.
But how are you finding the conference so far?
Very good, very good. It's actually my first visit to target markets.
Yeah.
So it's been super interesting to be able to be here, catch up with a lot of people that I've been meeting over the last few months. It's been great. Really enjoyed it.
Because your role has evolved a little bit since not since you joined, since you came to Dallas, but your role was historically focused on a much broader scope of investments and things at MS Transverse. But now you're also overseeing some of the work you have with the program business.
That's right. So I joined Transverse about a year ago. In fact, a year and a few days ago. And I initially joined to manage a portfolio of venture capital and private equity investments that we have through Transverse Ventures. And a couple of months ago, our CEO, Dave Paulson, pulled me aside and kind of twisted my arm into considering taking on a new role that would not just include the investment piece, but also take over responsibility for our business development team, which is for many MGAs, it's the entry point to MS Transverse. It's the way in which they first interact with us as a company. And it's our responsibility to evaluate the opportunities that come to us and figure out if it's something that might be a fit for our firm. And so it didn't take a lot of convincing, although I didn't tell Dave that. Yeah. And so here I am a couple of months in, and I'm meeting with some of the partners that I've spent a lot of time with on the phone over the last few weeks. Yeah.
Well, and a lot of this would have sort of aligned with your background before in venture capital and everything else, where you're sort of evaluating how viable is this business, how valuable is the underwriting team and the business model that they have. So this is kind of an alignment of all of your sort of historical skills sort of compiling into a role, hence why it was a real hard sell.
That's right. So to give Dave Paulson the credit that he is due, what Dave identified is that there are a lot of similarities in the investment process that we manage, but also the process that we should be managing on the business development side of our carrier. If you think about it from an investment perspective, we would meet with hundreds of new investment opportunities every year. We would spend time with them. We would evaluate an opportunity. We'd figure out if it's a fit for our fund, and then we'd make a decision about whether we want to invest. And the similarities on the business development side of our fronting carrier are significant. So we are meeting with, not just existing MGAs that we work with, but new MGAs that we could be working with, understanding their business plan, understanding their moat, understanding the technology advantage that they have, and figuring out if it's a fit for our balance sheet as a carrier. And so what we want to be able to do is bring some of that venture private equity discipline that we see on that side of our business into the fronting side. At least that's the mandate that I've been given.
Well, I mean, it makes a ton of sense, as you say. The parallels and the sort of similarities to that kind of work are significant. So it feels like the obvious extension of how this role goes. How do you think about where you want to grow this side of your business? Like, do you think about terms of doubling down on successful MGAs and deploying more capital with those firms, capacity with those firms? Is it expanding into a wider breadth of new MGAs with diversify across product types? How do you guys think about that, at least philosophically?
So maybe to start with, I'll share a few numbers from last year. So last year at Transverse, we wrote $2.2 billion of gross written premium. Now, just as a reminder, that is up from zero in 2018. So it's very much been an up and to the right journey for the team, at least that came before I did. So 2.2 billion of premium, that was generated by around 20 or so MGAs that we partner with. And we had, at the end of last year, kind of in the range of around 50 to 60 programs with those 20 or so MGAs. So you can already begin to tell the kind of story that those numbers tell. We work with a select number of very high quality MGAs, and we want to have as many programs with those MGAs as we possibly can. So the first kind of part of the strategy is, well, we want to do more of that. So we want to selectively add partners where we can, but we also want to be able to do more programs with the existing partners that we've got. And so that's why this is such a great opportunity for us, because we can sit down, we can talk not just at the operational level about how a specific program is operating and how we feel about it, but also kind of zoom out a little bit and talk about, well, what are your kind of more general objectives? What are your growth objectives as an MGA platform, and where do you want to be? And then the third part of it is, and this is where the investment piece comes in again, we really like to build really strong relationships with the capital providers to many of the MGAs that work with us.
Yeah.
And that's really important because that gives us a really deep understanding of how they think about their ownership in this particular part of the market. So it's a kind of multi-pronged kind of approach to our growth over the next few years.
Yeah, which is probably why this event is so interesting, because everyone is here, right? Your reinsurers are here, your MGAs are here, solution providers, the tech companies are also here. So
Absolutely.
It's making it a really interesting way for you to sort of explore what that role might look like as you evolve it.
It's just it. In a way, it's kind of for those people that are watching or listening that have been to InsurTech Connect, right? And we've spoken about InsurTech Connect in the past.
Yeah.
On the venture and investment side, it's a perfect opportunity to gauge who's working with who's doing what's important, what are the key themes coming out of the event. So yeah, you're absolutely right.
Yeah. Well, and you mentioned before the sort of relationship you have with the reinsurers and how they sort of support and get interest in things that they want to go do, but it also becomes a really interesting sounding board for yourselves. You're saying, I really want to do this, but you sort of bring it to a number of your sort of core reinsurance partners on your book and say, what would you think about? Is this something that you would like to get behind as well? Is that something you do? You sort of preemptively engage reinsurers?
Yeah, you're absolutely right. So we're very fortunate to have a foundation of around 150 different relationships with reinsurers across the market. And that is incredibly helpful for us because it enables us to have a very diversified range of partners that we're actually able to place business with.
Yeah.
But in amongst those 150, we have really good relationships with people that we can actually call well in advance of an opportunity reaching the submission stage and say, hey, like we see this, we like this for these reasons, we see these challenges, is this the kind of thing that you'd be interested in? I actually just spent the last couple of days at another insurance event down in Miami, and that's exactly what I was doing. So we're going to work through, this is the pipeline of opportunities that we're looking at, these are the kind of reasons why we like something or don't like something, what do you think? And so we're very fortunate to have that ongoing dialogue with those partners, and we don't lose sight of the fact that the reason that we're in business is because they provide their capacity behind us as Transverse.
Yeah, and is that something that you're sort of leaning into more? Is that do you sort of preemptively? Is that the preferred route to sort of preemptively engage them, especially for a net new deal that you might want to write? Sort of preemptively get them lined up in advance, or are there times where you could do it the other way around as well?
Do you know, it varies a little bit. So part of this is around some of the changes that I'm making as I move into this new role and bringing forward some of those key questions and some of those kind of big. We're kind of trying to do a little bit more of the evaluation up front as early as possible in our process to give our MGA partners as much certainty as possible that we will end up executing on a transaction. But I would say that it really varies. The way that we approach reinsurance really varies. So there are some occasions when some of our very well established professional partners will come to us and they've got a fully established reinsurance panel already. But in some cases they'll come to us with a brilliant idea, something that we at Transverse we get really excited about, and we will help them identify, well, who's the best reinsurance broker that you should be working with? Who are the reinsurers that we think would be really interested in this risk? So it kind of works both ways.
Yeah. What do you see the role of data playing as part of how information will sort of flow through that chain from the originating MGA or MGU all the way to those reinsurers, and what sort of role does that play in helping secure the capacity, helping get the price to be effective and cost effective?
So I've spent a lot of time over the last couple of months or so reading some of the submissions that we get from around some of the programs, and I guess I would say that in certain cases they're a little lacking when it comes to high quality data that we can use to make an informed judgment about whether it's a program that's a fit for us or not. So I guess that leads me to say that no one solved the data question. No one has, I think, a great answer on that. But perhaps to state the absolute obvious, it is critical, not just for us engaging our appetite for a program, but as you pointed out, the reinsurance market and helping them understand if it's something that they want to support. I think what I'm noticing from some of the vendors that are here, that there is a lot more focus on the MGA segment as an attractive segment for a software vendor. And I think that's maybe something we didn't see a few years ago if we were going to other conferences. I think then we would have seen a lot more reversion to kind of focusing on the bigger carriers, if you like.
Yep.
So it's been interesting to see that play out. MGAs are a natural buyer of a lot of this technology, and as you and I both know, can move a lot quicker than many of the incumbents that are in the space.
Yeah. Well, and I think one of the things you're seeing shift away, and this might be an evolution of SaaS more broadly for startups, but early days, the expectation was they would build everything in-house. Like the Lemonade days was, you're a tech-enabled, you're a tech-first MGA, so you build everything in-house. And now we're kind of moving away from that in the same way we have done with other solutions on software, going, well, I don't need to build a chat tool, I'll use Slack. I don't need to build I don't need on-prem, I can just use AWS. I think you're seeing a similar thing emerge in verticalized software here, saying you don't need to build your own back office, your own claims management tool, your own bordereau ingestion tool as an MGA. Even if you're a tech-enabled MGA, there's solutions that are probably easier for you to integrate with out of the box, which probably makes your life a bit easier on the sort of assuming side from your position.
I think you're absolutely right. I mean, if I think about, this is where the investment background that I have is very helpful, because it means that when we sit down with a potential partner, we can really get into the meat of, is something that they've built a genuine differentiator, or are they replicating what's already out there in the market? Is this something? Are they building something that we've already seen 10 different times? So I would agree with you. I don't think that we've necessarily reached a kind of settled state in terms of what's in-house, what isn't, and I think it very much depends on line of business. It depends on where you're focusing, and I think that plays a big role in dictating what you should be focusing on.
Well, in some of the new and emerging classes, the data you're expecting to get is still being defined. I think like property, well defined. You sort of know what you're going to expect to receive from property, but you go into all these sort of longer tail lines, casualty and specialty lines. The MGAs are doing an amazing job of accessing those risks in a really efficient and effective way, but we don't yet know what the out of the box data set should look like till it goes upstream just yet. We're still working on that, I think.
So I think you're right about that. I really do. I mean, I think the other risk that we see is there is a risk of collecting too much data. I mean, I met with a group this morning, and they were touting that for every risk that they look at, they're collecting something in the region of 15 to 20,000 data points. Now, I can't even begin to comprehend what the 15 to 20,000 different data points about a single risk might be. But you've got to be careful of almost like an indigestion, right? You're taking on too much data. Where do you begin to do something with this? Again, a kind of still to be answered question.
Yeah, I think when you look at it from the reinsurer angle, one that's sort of been the case for a long time, but at the end of the day, they sort of have then reverted back to saying, well, is this profitable or not? What are the sort of year-over-year loss ratios, and what are the trends at a high level? Because you have, what time of day did you buy this policy? Might have but is it fundamentally impacting your ability to underwrite risk, right? And so, yes, the data is there, but it should be distilled down into the points of valuable data. And I think the volume of data helps us sort of throw AI at it and help identify trends that you might not have otherwise uncovered. But you're right. There's a threshold. This indigestion model you use is really good.
Yeah, and this is where AI does come in, right? Because AI can do a much better job of sifting through those 15 to 20,000 data points than I ever will be able to. So that has a long way to play out. Now, of course, what the insurance industry is grappling with right now is a lot of tools that are coming through on the AI side are kind of generic in nature, right? They're not specific to insurance, and so we've probably got a little bit of time before we're really reaching the kind of peak of what AI can do in insurance. At least that's my hypothesis.
Yeah, no, I think it makes a ton of sense, and I agree with you. When you look at sort of all the people at the event, all the vendors, all the MGAs and the new ones as well as established ones, what are the things that sort of excite you? I think you're new in the role, right? So you're looking at this sort of fresh set of eyes as to where you want to take what MS Transverse does in this space. What are the things are sort of piquing your interest at this event? So
the beauty of our business model, because we are focused program by program on assembling that program and getting the reinsurance behind it, I don't have, I'm not restricted to a certain set of lines that I can go after or pursue a program in. So the great thing for me is that I can come to this event and I can meet with everyone about a broad range of different opportunities out there. We continue to be super interested in like niche lines, where they're super profitable, and the MGA has identified, they've got a better mousetrap, right? They've really identified a way of accessing that particular customer segment. So as I think we've spoken about before, I love new ideas. I love things that I've never even thought of. I will say that in the last maybe, I don't know, what time is it? I would say in the last maybe 6 hours, I've heard of maybe a dozen lines of business that I didn't even know existed in the insurance industry. And that is the beauty of the insurance industry. There are these corners and these kind of nooks and crannies that you occasionally come across that you've never heard of that turn out to be these huge markets in them, by themselves. And also incredibly profitable as well. So if you're an MGA out there working on one of those lines, give me a call.
Well, this is a great marketing way. It's like it's so important to get the right capacity partners as an MGA, so no matter where you are in that journey. So being able to identify and sort of, and this is, again, your VC background, but promoting, like, we're looking for companies in this area because we think it's interesting, but it's a very difficult to uncover them all the time. So this becomes a really powerful marketing message to say, listen, if you're in one of these super niche spaces that's actually quite a large segment that's just being untapped, let's talk. Let's come to, here's how we can contact you.
Absolutely. I remember when I was only on the investment side a number of years ago, I tried coming up with, on at least a couple of occasions, a shopping list. Like, these are the spaces where we don't have an investment. These are the spaces where we would love to do something. And it never really worked because there was always interesting stuff that popped up out of nowhere that you never thought of, and that you'd never even, maybe in some cases you'd kind of ruled out. And then when you got into the weeds of it, there was something interesting there. So.
But you touch on one of the most exciting things in the MGA space more broadly is the ability for them to hyper-focus into a niche with really deep expertise on how to underwrite that one little category and then sort of own that, where it's a really, pursuing that is a fool's errand for a big carrier to say, we're going to, you're never going to get that through an underwriting committee or anything else.
Correct.
So an MGA, you sort of tackle that and you don't need to focus anywhere else. You just sort of, we can just own this whole category. It creates a really interesting vector by which MGAs can tackle and expand the insurance market.
This is the beauty of the MGA model, right? We've seen over the last few years this ongoing shift of talent out of the larger incumbents because underwriters, insurance talent more generally, first of all, want to capture more of the economics themselves. They want to establish their own businesses, which is what an MGA enables them to do. But second of all, they want to be able to operate in a more entrepreneurial environment. They want to be able to move quicker. They want to be able to access or move into lines of business where, if they were at, one of the, let's just say, bigger incumbents, we won't necessarily name one, but if they were one of those organizations, they'd really struggle to get the resources to be able to make it happen. So that's, as I said, that's the beauty of the MGA model, and that's one of the reasons why Transverse was founded in the first place. Well,
and it's a really interesting business that you guys have, focusing so heavily on this sector, especially now, right, as this sector continues to accelerate and grow, and TMPAA has grown massively over the last couple of years because you're seeing this huge boom in what MGAs are able to do, and there will be winners and losers, as there always are, but this is a sector and a style of getting into the market that I think not only benefits the incumbents and people in positions like yourselves, but also downstream, like the way for us to efficiently provide cover to small businesses and niche products for consumers is really powerful here. So it's like an economic benefit for the greater good in so many ways.
And people say, well, how do you know that this trend will continue? Well, first of all, look at the underwriting results that the best MGAs deliver, right? They are delivering exceptional results. We're very fortunate to partner with a very, very large number of these well-performing MGAs. But also, let's bring it back to the capital side. The capital continues to flow into the MGA space, and for as long as that continues, there's no reason to believe that the MGA space will slow down.
Certainly not. Certainly doesn't seem to be the case here. Looking at this event.
Exactly.
So, well, Matthew, thank you so much for joining us on the Reinsurance Podcast. This has been an amazing conversation.
Thanks for having me.